this week I thought we'd cover a little bit of a different topic and we talk about personal finances. So what I often see is that our personal money issues or struggles become the same in our business. So if we've gone from a paycheck to paycheck mentality, I find when we become sole traders, they become an invoice to invoice mentality, and we're really not thinking about what the income that's coming in has to do, whether that's from a personal perspective or from a business perspective. So really that haphazard money management, as I would call it, doesn't necessarily serve us to give us that continuity and that kind of stress-free, low-stress money life. So the things that I use to manage my personal finances are budgets and buffers. So budgets, allocating a particular amount for anything, and buffers, building accounts up where there is money to utilise if it should start to rain, aka if it's a rainy day. So first two things we really need to work out are how much money do we make and how much money do we spend. Now if we're in an employment or we're a fixed employee and we kind of get that same paycheck each period, that's, you know, really easy to work out how much you make. But if we're self-employed or working in our own business, that figure's not going to be the same every week. It's not going to be the same every month, but we should have an estimate. But that's where number two really comes into its own. Knowing how much you spend will allow you to kind of work out what you'd refer to as a break-even point. You know exactly how much income you need to bring in to be able to make sure you can pay your groceries, your mortgage or your rent, your bills, the basics that you need to run the lifestyle that you have. So those two numbers, what you make and what you spend, really are financial management 101. But facing those numbers can be uncomfortable. It could be eye-opening or eye-watering to work out what it is you've spent your money on over the last few months and where you can maybe optimize or change that a little bit. So how are you going to come up with these numbers? So the first place that I go to is bank statements. So bank statements, credit card statements, and go through those. I'd suggest between 3 and 6 months. Like 6 months is really good, 3 months is okay. Working out where it is you've been spending the money that's coming in. Then we also need to remember that some things aren't paid in that period. So if we do have something on an annual basis, like car registrations, insurances, that sort of thing, we need to make an adjustment for them. So if we've paid them within that 6 months, we have to realise that's 12 months worth. And if we've not paid them within that 12 months, we need to add that figure in as well. The second thing to decide is the frequency of your kind of budget period. So would you like to run weekly, so you get money each week? Would you like to run fortnightly, monthly, or even quarterly? And kind of you come then down to, so if I need $1,000 a week to live my basic lifestyle, and then I need an extra $400 a week to live the lifestyle I want to lead, then at least you have those numbers and you can start working your income around those numbers. Remembering that if we have incorporated into the budget annual items or monthly items, if we're doing a weekly budget, that those items, annual and monthly and quarterly potentially, have to be allocated within the week as well. So you may need to separate off a little bit of savings for your council tax or for your strata bill or for any of those kind of non-regular items that aren't aligned with your budget period. And then the third thing that you kind of really, the kind of advanced step of this would be to look at those longer term goals you have and you add those into your budget as well. So maybe you want to take a long overseas holiday sometime, a new car, a house deposit, you know, those sort of bigger things that save for over a longer period of time also need to be incorporated into our budget. Now, the second thing then would be a buffer. So what do I mean when I say a buffer? A buffer, really, I'm talking about an amount of money kept in an account separate to your accounts that will cover you for a rainy day. So if for some reason you're not able to work as a sole trader, you're not necessarily going to be earning income, then you would be able to use this buffer to continue living your basic lifestyle. So your discretionary spend, so wine trips with friends, new shoes, handbags, could all potentially be popped onto hold for a little bit, but we really want to understand what our basic survival income is, and I would suggest 3 months of that really would give you that peace of mind that comes from having that financial buffer. Now, in terms of managing all this money, it can get a little bit overwhelming, remembering that there's $1,000 in there for a holiday and there's $1,500 in there for a new car. And if we have just one account, things kind of get overlooked, and there really is that temptation to spend the money if you're so inclined. So what I'd suggest is get some multiple accounts and manage money that way, so you can have separate accounts and you become a bit of a squirrel at putting money into these accounts for these different purposes. And if you give the accounts names for the things, it really helps to focus you, so that you know that when you're dipping into account X, that's actually for your holiday. So if you take $200 out of that account, that's $200 you're not going to have to spend on holiday. You're not going to be able to have an account for every single aspect of your life because you would have so many accounts. So you need something probably to help you track that, and that's where apps can come in. So Pocketbook, Mint, Spend, Track My Spend, Beautiful Money. There's a lot of apps out there that will link to your cards, credit cards, bank accounts, and track both your income and your expenses, and it will start to remember, just like bookkeeping software does, what that item is. So if you purchase from the grocery store, it will remember but it'll remember that when you've categorized it, and it will then start to track that. So you can set a budget within the app. I'd like to spend $200 a week on groceries, and then when you start to get to that limit, it will let you know you get into that limit. So it doesn't all have to be about basics, and I think this is where people start to worry about budgets. Budgets don't have to necessarily be all restrictive. My final tip for you would be to allocate something for a splurge. So allocate some of that cash to just have fun with. That's why we make money. We make money to enjoy our lives. So have some fun money, some play money, something for you just to be frivolous with and enjoy. I hope this video has been useful. If it has, give me a thumbs up or a like. Any questions, leave a comment. You can subscribe to my channel, and you can also head over and check me out on my website. I'll leave a comment in the description with a link to the written version of this blog and to the details.